the 15th of May here for just a quick live update about the markets. Gonna try to keep it quick. Gonna just jump right into what's happening over in futures and forex, and we'll roll from there. So let's forgot to turn off those darn notifications, and it's a busy morning already. I mentioned the other day that I'm working on helping a friend launch another product, and we're kind of at that point where everything's coming together at the very last piece of this, and there's just a lot of messaging and whatnot rolling around. I'm going to share that with you next week, because it's one thing that it's a big piece of the business, make money from our laptop, right? Trading is what I talk about every single morning, but on the website, on the members area, there's a lot in there about affiliate marketing, which is another great way to make money, and it's a huge supplement to whatever you're doing. You can make a lot of money through affiliate marketing, through utilizing knowledge that you have and sharing that at a price, right? Creating a product and putting that out to the world. So next week, what I'll do is I'll share a little bit about that, how it works, and I'll have to link. Well, anyway, we'll get to that. We'll get to that next week, so you can see a little more about how it works and some practical application of some of the courses that are available in the members area. Because not everyone's really into trading. Some people might like to do it a little bit, but there's some proven, time-tested techniques. Again, the simple stuff that works, that if you just keep doing it, will work to generate income outside of what we're doing over here with trading. So anyway, let's get to the trading stuff. What's going on? Another manic market. Just another manic market. I'll have to learn that song on the guitar. Yeah, man, it's craziness. Opening, this morning and off trading hours, Dow's down a few hundred points. The S&P is down coming into the new trading day, new live session. We've got some reports coming out here in just a moment, about 28 minutes from now. We've got retail sales reports, so the core retail sales and retail sales reports are coming out. These, obviously, we're looking for negative numbers, not as a good thing. It's just a facet of what's happening. We've got, a pretty crappy situation that we're in right now. The market has not reflected it. It's been, rallying. Of course, over the last couple of days now, we've seen it pulling back a bit, but still ultimately it's up quite a bit as well from those previous bottoms. I'm honestly surprised, and we may see more negative movement if depending on what happens this morning, and possibly when more and more company earnings come out, and we just have to the powers that be have to stand up and finally take notice of the situation we're in, and maybe that market starts to react to it. It certainly hasn't recently, and that's why we don't get emotional about it, right? That's one of the reasons that we don't worry about what you think or I think or anyone else thinks should happen, because obviously if you're watching the news, the people that are reporting the news are paid to have an opinion, and they just simply are paid to put something out there. They don't know any more than you or I do. They have no clue of what's going to happen. They speculate, just like Aunt Sarah. They just speculate about what's going to happen. Nobody knows. Don't buy into that bullshit. No one knows what's going to actually happen. All we can really do is have a trading plan and trade that plan. And the trading plan, is going to give us our biases and let us know what to do if certain things happen in the marketplace. So let's look at that, because we've been talking about a different way of trading here over the last few weeks. We've talked about breakouts, we've talked about bounces, and now we've been talking about, good God, I've got to silence this thing. These notifications are driving me crazy this morning. Don't they know I'm trying to talk? Anyway, we've talked about breakouts, we talked about bounces, and we've talked about the combo of a pullback, or a bounce, and then a breakout from that. And those are really effective. They're all effective trading strategies. All of them are effective. what becomes ineffective is the execution of the strategy, meaning that we don't often stick to the rule, and that's when the strategy falls apart. And it's typically driven because every strategy has a series of losses, and typically it's when you experience a series of losses, you lose faith in the strategy, subconscious starts kicking in, all these other things start happening in our subconscious mind that drive us to either abandon the strategy or, quote, try to modify it on the fly and all these things, and they just don't work. I mean, think about trying to fix a car as you're going 60 miles down the road. You can't do it, right? So anyway, with that said, let's talk about strategy. So, we've been talking this week about the bounce with the breakout, or a pullback with the breakout. And what that really is doing for us is it lets us trade in the direction of the longer term trend. It lets us trade in the direction of the bias, but it also allows us to get in at one of the better levels because we're getting in at a place where price has pulled back. So, as opposed to like a breakout where we're waiting for price to move up and give us confirmation of a move up in order to get in as it breaks out of that key area. With this pullback breakout, we're still trading in the direction of the trend, but we're letting price pull back a bit for us before we do it. So, we've talked a little bit about biases, and when I look at this, now everyone's time frames may be different. You've got to figure out what works best for you for your specific time frames, and what indicators you want to use in order to determine your bias. I use a very simple indicators, just looking at moving averages and moving average cross, and I look at that on a couple of time frames. So, at the 4 hour and then on the 30-minute. So on a 4 hour, here on the ES, on the S&P, we're in a downward trend. In 4 hour, we got a confirmed cross, which tells us that our bias is short. On the 30-minute, over here, we haven't crossed yet, but if we continue pushing lower, we may get this to cross over. For me, if the biases that we're looking at don't match up, then that tells us, hey, don't look at a trading opportunity. If they do match, then that allows us to move to the next step and look for potential trading opportunities. So let's have a look at that across the three markets that we watch over here. We've got the S&P, we've got oil, and we've got gold, right? So, utilizing that strategy, that process, which is, I think everyone can agree, is super, super, super simple process, where we're just looking for what's our bias on the 4 hour, what's our bias in the 30-minute. If they agree, we've got a confirmed opportunity to trade in whatever direction that bias tells us, right? So, if we're looking at, let's say yesterday, the ES, the S&P, we had a bias that was a 4 hour bias was down, as well as the 30-minute bias was down. So with that said, and we're looking for the live trading session to begin, which is at 8:30, and at that point we'd be looking for a pullback. So right now, we're in a downward trend, so what we'd start looking for would be opportunities where we have a higher low, right? So a higher low where we start pulling back, and that would allow us to then enter the marketplace on that higher low, and then utilizing a stop loss at the higher high of that candle that had just closed. So, live session begins right over here, 8:30. This candle closes, and then we start our live trading session, at 8:31 my time, which is 9:31 Eastern time, right? So, and also I've mentioned before, if you throw a volume graph down here, you'll see you've got much higher volume at that time. We want to trade anything that we're trading in any instrument, whether it's in Forex or in crypto or in futures. We want to trade during times when we've actually got some volume and some volatility. When we trade during off hours, when we trade during times when there's not a lot of volume or coming in, the situation, the volatility that's driven by that is kind of artificial, because one big order wipes out all of the pending orders in one direction or the other, and it can cause the market to very quickly and rapidly move. So, they're not. It's not. It's not the best time to trade. It doesn't mean that things don't happen during those periods and that you couldn't trade during those periods. Just if you look at the times when you've got more participants in the market, you're going to have a better opportunity to be part of real and potentially longer term movement. So we want to trade during times when we've got the most activity in the marketplace. In foreign exchange, think of it as when those economies are actually open and trading. Like right now at 7 a.m. Central Time, Aussie versus the yen. Both of those markets are closed. It doesn't mean that there's not trading going on between the Aussie and the yen. Those things are certainly occurring. But it's not going to be as active as it would be during the time, the Australasian session, when both of those markets are fully underway. So you can see that if you just simply throw a volume graph on your chart, you'll be able to see when the times of that higher activity is occurring, and you want to trade during that. Which is why even in the futures market, do you sit there at your charts and trade all day long? No, trade during the few hours that have the highest volume. Trade during just pick a few hours of the day. You're not going to do any better if you sit there and stare at your charts all day long, right? So anyway, going off on kind of a tangent there. So anyway, we're looking for prices after we've got that live, that regular trading hours underway, where we're looking, because we're in a downward trend, we're looking for pullbacks. So we're looking, to retrace at the bottom of these higher lows as it begins retracing. So ultimately, end of the day, we'd be in it, watching the market, moves down, then it starts to move up. So we have an entry here, doesn't fill it. Then we have an entry here with a stop loss way up here. Now, that might be too rich for your blood, by the way, because that's that candle right there is just eyeballing it probably about 13 points. So if that's too rich for your blood and an E-mini, if your account size isn't large enough in order to be able to accept that level of risk on one contract, then maybe you need to move down and look at a different. Then maybe you need to move down and look at micros. The futures market has micros in a lot of these as well. So keep that in mind. Take your risk accordingly. Your risk should always be a percentage of your account. And if your account, if 13 points of risk on an E-mini, on one contract of an E-mini is more than 2, maybe maximum of 3% of your account, then maybe go down to E-minis or E-micros and look at those as your opportunity, so that you can size appropriately. Or you might have to look at different time frames too. So anyway, we would have been put in here, and then price would have moved against us, or moved for us just for a minute, and then ultimately over time came back and finally would have stopped us out about an hour and a half later. Would have taken us out back here. So that one would have stopped out for a loss. Now, over here on crude, moving on, same exact process though. Crude is in an upward trend. The 4-hour is long and the 30-minute is long on crude. So just watching this over here, coming in, regular trading hours. Now this one's an upward trend, so we would be looking for lower highs and then putting our stop loss at the bottom of that previous candle, to manage our entry point, right? Or manage our risk. So I'm sorry, there's a bunch of noise in the background. My son got up and he's putting batteries in an electric car, and it's I'm a little distracted with the noise, which is fine. Obviously, this morning I just must be distracted. I must be easily distracted this morning. So anyway, so we're in an upward trend. What we're looking for is we're looking for pullbacks. So if we're in an upward trend, we're looking for pullbacks where we have that lower high and then potentially a lower low. So as we get started here at 8:30, begins here. This bar closes. Do we have a lower high? Nope. It's moved up. It's moved up. It's moved up. Pulls back here. So as it pulls back, this would now be the first potential entry point for us. So we would set a buy order up here at the top of this candle, and we'd set a sell or our stop loss at the bottom of this candle. Next candle begins, keeps pushing down a little bit, then finally floats up, it breaks through the top of that area, and then it continues on. If you're looking for 2 points, 2 to 1, it definitely covered that. If you're looking for 3 to 1, it covered it. So that one would have moved on and done well for us as well. Gold. Yesterday we talked about gold, looking for continued buying opportunities on gold. We mentioned a breakout over here above 1726. We also mentioned pullbacks to this key area of 1722. As we got started for the day, gold. Let's find it. Dun, 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 dun. Gold over here. The 830 candle. So this is the candle that closed, and then we opened over here, actually closed with lower than the previous. We can place our entry point at the top of that lower high and a stop loss down here at the bottom of that previous candle, and then price just cracked on as the market got started and pushed higher, getting us into that potential 3 to 1 risk reward. So you can see how you would have lost this one, you would have won here, you would have won here. You might have lost all three. It happens. It happens. Some days you have multiple entries, and they both, all the entries end up, being losers. It happens. There is no system in the world that'll give you 100% winners. Even the systems that are like micro scalping, where the second it moves a couple of ticks in your favor, it's taking the risk and it's moving it to break even. Even those systems, even those momentum driven systems that are driven by really high frequency computer algorithms, they still have losses. There is no way to remove losses from the market other than simply not trading. So it's important. I talk all the time about putting in the work, putting in the effort, doing your time. It's really important. You can keep a super, super, super simple system. You don't have to overcomplicate it. Because for me, if you have a manual trading system, the more filters you put in, as I said yesterday, the more failure points there are. There's just more opportunities for you to deviate from the plan and find reasons not to acknowledge, one trigger or another trigger or whatever it might be. So you can keep your system super, super simple, but understand the pros and cons of it. If you understand the pros and cons of it, then you're more likely to be able to accept the times that it's moving against you, it doesn't work. If you've done the homework and actually looked at this legitimately, gone back over 100, 150 trades and really taken the time to look at how price moved and how often you got touched in and then stopped out immediately, how often you got touched in and price went 2 to 1, how often it went 3 to 1. That helps you understand where you want to start looking at your risk to reward, or your reward to risk, and figuring out what you're going to do there. It allows you to see quantitatively what your drawdown looks like. It allows you to see a history of, wow, maybe right now you've experienced 4 losses in a row trying to do this, but you've looked historically and you've got a winning plan that you've back tested over 150 trades, but then you could see right there on paper, well gosh, this even experienced 6 losses in a row, but I see over time that those 6 losses are kind of irrelevant because the equity curve keeps going up if I stick to the plan and apply that the same way every time, every day in the market. So there's a lot you can do, but you've got to put in the time and you've got to put in the effort to actually create a plan. Starting number 1, I've given you 3 different ways of approaching the market over the last 3 weeks. You've got to pick one of those that speaks to you and actually write it down. Write down your plan. It doesn't have to be my plan. You can use different indicators to identify what your bias is. You can use, you might maybe even use some other expert advisors and things to help you with your trading, whatever it might be. But write down your plan so you have a quantitative way of approaching the market every single day, and then back test it. Actually do the work. It won't take you a ton of time if you sit down and actually do it. And if you think of what you can gain down the road, it's immeasurable, right? We want these instant rewards, but we don't want to do the work to get them. We just want the reward to fall in our lap. You're not going to just enroll in medical school and the next day become a brain surgeon. You know, you got to put in the work. You got to put in the effort. You know, I certainly didn't want to put in the effort to do any of that. I hated it, but you know, you put in the effort here. You know, you can legitimately, if you really take the time to put in the effort and study and work hard and find that quantitative way of approaching the market, you can, you know, have a career that's going to far outperform, you know, other things that are out there. But you've got to take the time to actually do the work, right? And then be honest with yourself, because every day we're going to have wins and we're going to have failures, right? I mentioned the other day I had a positive day from a monetary outcome, but I traded terribly. And I have to acknowledge that, because it's important, because otherwise that's where the backsliding occurs. We start falling into these traps where our subconscious goes, ha, I've got you now. I convinced you to take these trades, and you shouldn't have taken those trades. But hey, it's okay to take those trades, really. Go ahead and do it. You can deviate from the plan once in a while. It works out. You know, it doesn't work out over the long term. So I'm getting off on a big tangent here. Anyway, it's important to do the work. I guess that's what I'm getting at. I've given you 3 ways of looking at the market: breakouts, bounces, and a combo of a bounce with a breakout. All are equally as effective. They're all have that potential. If you look at some of the filters to give yourself a slight edge, give yourself a mathematical edge from your risk to reward, it'll work out in your favor. But you've got to put in the work to do it. You've actually got to stick to the plan in order to reap those results. So anyway, there it is. So what else is happening? I don't know if that, now that I've still got 8 minutes to the news, I'm going to be out of here before the news occurs. For the day today, coming back over to these, the market's crazy. I think we can all agree the market's been turned on its head. Core retail sales, this report coming out, core retail sales and retail sales, these reports certainly could be impactful to the market and could cause a lot of volatility in the marketplace. So just be aware of that. They're going to occur before the session, the live trading session begins for your Dow and your E-mini and your Russell and whatnot. But just be aware that as the market starts, here in about an hour and 7 minutes, there will be reaction to this news. And some of it may have already reacted to the news. We may have a news reaction in off hours that are totally opposite of what we, quote, think should happen. And then when the regular trading session begins, there could be a lot of chop and a lot of whip. And then, so just have to kind of think through how you want to ride that out, and what your trading plan is going to look like as that session gets going. And remember just to stick to your plan. Trade what your plan says, not what you think is going to happen. I cannot reiterate that enough. The market doesn't care what you or I think. We're specks. We're specks in the overall volume of trades that are out there. Don't try to be smarter than the market. Just do what the market's doing, right? That's all we have to do. Over in the crypto side of things, had a little bit of a rally. Bitcoin's been pushing up. It's rallied for us over the last few days. It's been hitting its head up here. It can't quite get back to 10,000. It cracked it over here. It's been hitting its head on 10,000. We made a run for it, and it's pulled back a bit. It's been hanging over here around 9,600. Our Ethereum has just crossed back over from a short back to a potential long bias over here on the 4 hour. So ETH and Bitcoin are both in agreement as far as their biases being in the same direction. Ethereum, same thing, had a little bit of a run. It's been having trouble staying above 200. 200 seems to be this floor, this 199 to 200. So we'd continue to look for buying opportunities off of 200, see if we can't continue to help this thing push longer. Over here on Bitcoin, same deal. It's finding its ceiling up here right now. This potential floor, the support point, down here at 9405, maybe even 9500, looking for pullbacks to see if we can't accumulate some more and see if this could go potentially long from here. So depends how you want to look at it. There's different ways of approaching it. But those could be some opportunities for you, just some ideas that we're putting out there. So, if you're looking to continue to trade on these, the idea would be continue to accumulate off of 200, continue to accumulate off of 9,500 over here as we look for continued long opportunities on both of those. So, all right, I think that's it. I think we've hit it all. The number on S&P is going to be this 2810, 2808 area. So we'll see if it cracks below that on news, and if it does, we'd continue to look for potential shorts around that. But again, don't second guess the news. Only trade if your setup gives you the right points to take the trade. All right, so that's it. Have a great day. We'll talk to you soon. Have a nice week.